Now let's get to the CME Group in Chicago, where Rick Santelli is with the Santelli Exchange, and bonds moving on that ISM data, Rick.
Yes, they're moving on a lot of issues. Thank you. I'd like to welcome my guest, Jim Bianco. Real quickly, she's absolutely correct. We are now looking at fresh cycle low closing yields on the curve. And the main reason is, for the first time in 3 years, ISM moved under the expansion contraction line of 50. Any thoughts there?
Yeah, when it last did it in 2016, it was driven largely by a collapse in the energy sector when price of crude oil went from over $100 to $26. You don't have that one sector driving it lower now. This is more organic. It seems to be a generalized slowdown. In a lot of ways, that's worse. You can't just dismiss it as, well, the price of crude oil collapsed, and once it rebounds, the energy sector
So it's not an economic trigger. What you're saying is that this, for the most part, is the festering of self-inflicted issues, not to say whether we shouldn't have self-inflicted them or not. Okay.
Exactly.
Now, what did Alan Greenspan say when the notion of we may have negative rates? What was his comment?
They were no big deal.
Wrong. I'm sorry. I know he's the maestro, but we both agree, and you've written a piece on it. Tell the world why you think it's such a bad idea. I've always thought it could be the worst event in financial U.S. history, in my opinion.
I don't think you're wrong on that. It is the financial sector, the banks, the insurance companies, the pensions, the security settlement is all structured, invented on one assumption: positive interest rates.
Marginal reserves?
Yeah, marginal reserves. Everything is on positive interest rates. You take those away, and now the investment decision loses you money in a negative interest rate world. The banking system doesn't work. Pensions don't work.
How does the European system work? They're doing a little fudging, aren't they? Some creative movements you were telling me about?
Yeah, the European system works because we, the reserve currency, are still positive. Banks like Deutsche Bank are restructuring their entire worldwide reserve system to invest in U.S. dollars because they've got positive yields. If we go down that road and go negative yields with them and cut everybody off from positive, I think the financial system is at severe stress then at that point. It's a huge mistake.
So basically, at some point, the president needs to put somebody on the Federal Reserve Board that has an idea how to address this, and I think you have an idea who that might be.
Judy Shelton. Judy Shelton has called for a new Bretton Woods agreement on interest rates.
For those real quickly, Bretton Woods, to kind of get everybody together and figure out what's going on with the foreign exchange side here and how can we make it better.
Right, and now we need to get together with the interest rate side and figure out how to make it better. If the Europeans want to go deeply negative and the Japanese want to go deeply negative, I've argued they force us down. That's why we've got new cycle lows. We're all interconnected. Maybe that's not the best thing for us, but it forces us down. If we don't go, it's bad for us too. We need to get together and say, look, all our interest rate policies affect everybody else. You can't go to negative 70 basis points with bonds and then have us stay positive to bail you out.
I couldn't agree with you more, Jim. Here's the problem I have, and you and I talked about it. LIBOR. How many years has it taken to fix that? And to get it ongoing, right? So what are the chances we're going to actually get this meeting and make a difference in a tight timetable? Seriously.
Zero.
I know.
It's taken 10 years.
It's a depressing place to leave this, but somebody needs to do something. Thank you, Jim Bianco.